us about this king dollar easing somewhat today, but can the dollar continue to be supported?
Look, I think it can, and particularly against the euro as an example. Actually, commodity currencies have been incredibly resilient to what has been significant, as you said, volatility in commodity markets itself, as well as the risk-off that seems to be across many global equities as well. With respect to the dollar, the Fed clearly are going to continue to move forward on the path of tightening. The market has wound back some pricing with respect to whether they hike 50 basis points or 25 basis points, but it's very clear from the Fed speakers. Also, the impact of commodities on the inflation side is going to play into this. So generally speaking, we think that the dollar will be supported as rates go higher, and also particularly against the euro, because the EU the ECB is going to have to be a little bit more circumspect here.
Interesting to see yuan movements as well, pretty well supported, trading at a 4-year high. The PBOC coming in today, wanting to contain the strength. Where does the yuan trade from here?
Look, we think it trades a little bit on the softer side. Of course, on a trade-weighted basis, it's been very, very stable, and we don't think that that will be significantly disrupted from here. But given we have a stronger dollar bias, we do think that the CNY can depreciate somewhat against the US dollar, but over recent weeks we've moderated that view to some degree. So generally very stable going forward, which is particularly good for the Asia region more generally.
Well, we look at a dollar which has strengthened quite markedly of late, especially against some of those emerging market currencies as well. But, you know, and on top of that, commodities are priced in dollars. So it's a bit of a double whammy for many of the countries regionally. How bad can inflation get as a consequence of this?
It's a really good question, Rush. And I think that the countries that are most susceptible here are countries like India, where obviously they import most of their, or a lot of their, liquid energy in the case of oil, gasoline, etc. The Philippines as well can be quite susceptible, as well as countries like Indonesia, who, while they export a lot of coal, they actually import a lot of oil-based products. So particularly those countries and those currencies are susceptible. We have seen in areas like the Indonesian currency where the current account surplus has been better than expected. And so these current accounts are actually supporting many of these currencies that traditionally would have sold off pretty hard when US rates begin to rise. As I say, though, the most sensitive here, probably to the higher energy prices, is the Indian rupee, particularly against the dollar.
Yeah, then you've got the agricultural side of things, haven't you? And that complex is also really also benefiting, you can say, but certainly the price is going up there as a consequence of what's going on in Eastern Europe. So give us a sense of what your targets are and which are the ones to watch out for in particular.
Yeah, so I think, sorry, Reece, I just missed the start of your question there. I think it's respect to industrial metals. Is that correct?
No, I was talking about agricultural products, corn, wheat and the like.
Yeah, sure, absolutely. So the key commodities there are generally wheat and corn. Russia is one of the world's largest wheat exporters. Ukraine is quite a global force in the corn market these days, increasing area significantly over recent years. I think the risks are a number of fold in agriculture as a result of these conflicts in the Ukraine. First thing is around the prices themselves. So clearly a number of the ports in the Black Sea are not taking boats at the moment. Those ports are closed, and that is going to limit the export of some of those commodities out. In particular, at this point, corn is at risk as well as wheat to a large degree. The second round effects are also interesting, Rush, and that is with respect to fertilizer. So Russia is a significant global exporter of key fertilizer components such as nitrogen, DAP, as well as potash. As those prices rise, farmers may be tempted to use less of those commodities. that puts yields at risk in a number of countries as they enter the spring planting period, particularly for Europe as well as the United States to some degree. And then the third thing, of course, is we still have, albeit moderating, a pretty active La Nina event currently sitting over parts of the United States as well as Brazil, Argentina, and so forth. Those events are causing dry conditions. The drought situation in the US has deteriorated somewhat. There are still very dry conditions in Canada. So it's not just the Ukraine-Russia issues that are creating upside to agricultural commodities. It's also these weather-related facts. So effectively from here, if the weather was to deteriorate in the US as we approach spring planting, or weather conditions remain poor in Canada, we could expect that oilseeds, for example, would move sharply higher from here, potentially topping $20 for soybeans.
Wayne, we can't talk to you without touching gold. I mean, it is a shining metal yet again. Where do gold prices go from here? You've revised up your projections.
Yeah, we certainly did, Haslinda, and part of that was in recognition of the volatility that is being caused with the issues in Europe. So gold has been a great hedge against a lot of the risks that we've faced, and that should support gold prices around these sort of elevated levels. Our target at the end of June is $1,850. We revised that up $100 an ounce in relation to the risks that we may see. But longer term, we still see downside for gold. The reasons are pretty key for us. Firstly, we think that real interest rates in the United States will rise into the second half of this year. Second point is we have a stronger dollar bias. So hopefully these geopolitical risks begin to simmer down, and that leads to a little bit more of a benign risk environment on a global basis. I really hope that as we go into the second half, then we would expect to see downside to gold, and we have a target at the end of the year of around 1,700 as a result.